The global economic order has been upended. The foundations of international commerce, once seemingly immutable, are now shifting beneath our feet. We're witnessing a dramatic reshaping of alliances and trade routes, a seismic event that promises to redefine the landscape of global economics for years to come. 7 of America's top trading partners, Germany, a powerhouse of European manufacturing, Japan, a nation synonymous with technological innovation and precision engineering, South Korea, a dynamic force in electronics and automotive industries, France, a country known for its luxury goods and advanced aerospace technology, Italy, a major player in fashion, design and specialized manufacturing, Mexico, a crucial link in North American supply chains and a rising industrial hub, and the UK, a global financial center with a strong presence in pharmaceuticals and creative industries, have announced a coordinated pivot away from the United States. This marks a significant departure from established trade relationships, signaling a potential restructuring of the global economic map. This dramatic move follows the Trump administration's sweeping new tariffs. These tariffs, implemented with the aim of bolstering domestic industries, have inadvertently triggered a chain reaction with far-reaching consequences. Instead of the US, these nations are redirecting trade and investment to Canada. Canada, with its stable economy and commitment to multilateral trade agreements, is emerging as a new focal point for international commerce. For decades, the US was the world's trade hub. Its vast consumer market, technological prowess, and strategic geographic location made it the undisputed center of global commerce. Now that status is in question. The departure of key trading partners raises concerns about the long-term viability of the US as the world's leading economic power. These are not minor players, they're industrial giants, deeply embedded in global supply chains. Their decisions reverberate throughout the world economy, impacting countless businesses and consumers. Their exodus signals a profound loss of confidence in American economic policy. This erosion of trust could have lasting implications for international relations and future trade negotiations. The catalyst, steep tariffs meant to protect U.S. industries, a strategy that has backfired spectacularly, but which have instead driven allies away. These tariffs have created a climate of uncertainty and resentment, pushing long-standing partners to seek alternative arrangements. The electric vehicle sector, once a symbol of American innovation, a beacon of hope for a sustainable future, is now in crisis. The tariffs have disrupted supply chains and increased production costs, making it difficult for American EV manufacturers to compete in the global market. Supply chains are disrupted, costs are soaring, and companies are reconsidering their U.S. investments. The long-term consequences of these disruptions could be devastating for American jobs and economic growth. This is more than a policy dispute, it's a historic realignment of global commerce. The decisions made today will shape the future of international trade for generations to come. Why did these nations flee? What are tariffs, and how did they trigger this exodus? These are the critical questions we must address to understand the full scope of this economic upheaval. We'll explore the devastating effects on the U.S. economy and what this means for America's future as a trade leader. The stakes are high, and the path forward is uncertain. The consequences for American workers and industries are just beginning to unfold. Job losses, factory closures, and economic hardship could become widespread if this trend continues. The world is watching as the U.S. faces a new era of economic uncertainty. The decisions made in Washington will have profound implications for the global economy. The question now, can America regain its place at the center of global trade? Can it repair damaged relationships and restore confidence in its economic policies? Or has the world moved on? Has the U.S. squandered its position of leadership, paving the way for a new world order? At the heart of this crisis, a complex web of economic factors is at play, influencing markets and shaping international relations. Is the tariff a tax on imported goods? These taxes applied at the border directly affect the price of goods entering a country. Tariffs are meant to make foreign products more expensive, thereby reducing their appeal to domestic consumers, encouraging consumers to buy American, supporting local businesses and industries. This shift in consumer behavior is the intended outcome. Governments use them to protect domestic industries, shielding them from foreign competition and fostering growth within their own borders, or as leverage in trade disputes, using tariffs as a bargaining chip to negotiate more favorable trade agreements. But tariffs are a double-edged sword, presenting both opportunities and risks for the global economy. They raise prices for consumers, making everyday goods more expensive and potentially reducing purchasing power, and can provoke retaliation, sparking trade wars, where countries impose tariffs on each other's goods, leading to widespread economic disruption. When the US taxes German cars, increasing their costs for American buyers, Germany can tax American goods in return, escalating the conflict and harming businesses on both sides. Supporters say tariffs protect jobs, safeguarding employment in domestic industries that might otherwise struggle to compete, and national security, ensuring a reliable supply of essential goods and services within the country. Critics argue they stifle growth, hindering economic expansion and innovation by limiting competition, raise costs, and disrupt global supply chains, creating inefficiencies and increasing expenses for businesses and consumers alike. In today's interconnected world, where goods and services flow freely across borders, tariffs rarely stay contained. Their effects spread far beyond the initial target. They ripple through economies, impacting businesses, consumers, and governments worldwide. The debate is old, with economists and policymakers having argued about the merits and drawbacks of tariffs for centuries. But the stakes have never been higher, as global trade becomes increasingly complex and interconnected. The latest tariffs have set off a chain reaction, triggering a series of economic consequences that are still unfolding. With consequences far beyond Washington's intentions, affecting industries and consumers around the globe in unexpected ways. The world is now feeling the impact, grappling with the far-reaching effects of these trade policies. The turmoil began on June 11, 2025. President Trump in his second term announced sweeping tariffs, 25% on all manufactured goods from the EU, Japan, and South Korea, and a staggering 50% on electric vehicles and components. The administration claimed it was about national security and bringing jobs home. But the response from allies was swift and severe. Berlin, Tokyo, and Seoul called it economic aggression, not legitimate policy. The tariffs made it nearly impossible for these countries to sell in the US market. Years of trade uncertainty had already strained relationships. This was the breaking point. The 7 nations began looking north, to Canada, for stability and opportunity. The US had chosen confrontation over cooperation. The exodus was about to begin. America's trading partners were voting with their feet. The 50% tariff on electric vehicles and components hit the US auto industry hard. Modern EVs rely on global supply chains. Batteries from South Korea, semiconductors from Japan, electronics from Germany. Overnight, production costs soared. A $10,000 battery pack now cost $15,000. Automakers passed these costs to consumers, making American EVs thousands of dollars more expensive. Sales plummeted as buyers turned to cheaper, gasoline-powered cars. Billions invested in EV production were suddenly at risk. Foreign automakers with US plants faced the same dilemma: absorb losses or move operations. The tariffs, meant to protect American manufacturing, were destabilizing it instead. Production lines slowed, jobs were lost, and the industry's future was thrown into doubt. The shockwaves rippled through the entire sector. The American dream of affordable, homegrown EVs was slipping away. The crisis was just beginning. The 7 nations facing US hostility found themselves at a crossroads. They had to reevaluate their economic and strategic alliances in a rapidly changing global landscape. The once reliable partnership with the United States was now fraught with uncertainty, prompting a search for a more stable and predictable environment. Made a strategic pivot to Canada. This decision wasn't made lightly. It was the result of careful consideration and a deep understanding of the shifting geopolitical dynamics. Canada, with its stable economy and welcoming policies, emerged as an attractive alternative. High-level talks led to a clear conclusion. The path forward required a bold move. The risks of relying on the US were too great. The potential for economic disruption and political instability loomed large, threatening the long-term interests of these nations. Canada, a G7 nation with stable policies and free trade agreements, offered a safe harbor in a turbulent world. Its commitment to international cooperation and its strong regulatory framework provided a sense of security that was increasingly absent elsewhere, became the new gateway to North America. Its strategic location, coupled with its robust infrastructure, made it an ideal hub for international trade and investment. Major corporations quickly shifted investments, recognizing the immense potential that Canada offered. German automakers paused US expansions and built new plants in Ontario, drawn by the province's skilled workforce and favorable business climate. Japanese firms moved distribution hubs to Vancouver, leveraging the city's strategic location on the Pacific Rim to enhance their global supply chains. And South Korean battery makers partnered with Canadian companies, seeking to capitalize on Canada's abundant natural resources and its growing clean energy sector. Each move was a blow to the US, further weakening its economic standing on the global stage, and a win for Canada, solidifying its position as a rising economic power. This wasn't just a few companies. It was a mass migration of capital and expertise. It was a coordinated realignment, a deliberate effort to reshape the global economic order. Governments offered incentives and support for the shift, actively encouraging businesses to relocate and invest in Canada. Canada's commitment to rules-based trade, its transparent regulatory environment, stood in stark contrast to America's unpredictability, its protectionist tendencies, and its increasingly isolationist stance. The message was clear: stability and predictability are paramount. Global business needs stability, a foundation upon which to build long-term growth and prosperity. The US had lost its reputation as a reliable partner, undermining its credibility and eroding trust in its leadership. The exodus was underway, a mass migration of businesses seeking refuge from the storm. The world was watching, as a new chapter in global economics unfolded before their eyes. Canada seized the moment. Prime Minister Trudeau's government welcomed displaced businesses with open arms. Canada's pitched stability, free trade, and access to critical resources for the green economy. German and Japanese companies could now trade freely with their home markets from Canadian soil. Canada's reserves of lithium, nickel, and cobalt made it a natural hub for EV manufacturing. The government offered tax credits, special economic zones, and fast-track visas for skilled workers. Cities like Windsor and Vancouver boomed with new investment and jobs. Ports bustled with goods that once flowed through the US. Canada wasn't just picking up the pieces, it was building a new future. The transformation was rapid and profound. Canada had become the new center of North American trade. The US felt the pain immediately. Promised jobs vanished as foreign automakers canceled expansions. Existing factories laid off workers, especially in the Midwest and South. Prices for cars, electronics, and household goods soared. Inflation hit American families hard, with wages stagnant. Investment dried up as the US lost its reputation for stability. The stock market tumbled, and economic growth stalled. The very industries tariffs were meant to protect were now in crisis. America's attempt at economic self-reliance had backfired. The nation was more isolated and weaker than before. Behind the numbers, the human toll was devastating. In the Rust Belt in the South, factories closed and layoffs mounted. Families who'd found new hope in manufacturing faced uncertainty again. Small businesses that depended on factories, diners, trucking companies suffered. Real estate values fell as people left in search of work. The tariffs, meant to help, were tearing communities apart. For consumers, everyday goods became unaffordable. The trade war's burden was felt in every household budget. Social and political divisions deepened as frustration grew. The promise of America First had become a source of resentment. The pain was not just economic, it was social, and it was everywhere. The cost of isolation was clear. 2025 marked a turning point for America and the world. The exodus to Canada was not a protest, it was a permanent shift. The US economy, built on global integration, was thrown into reverse. Tariffs meant to protect became self-inflicted wounds. Canada, with new partnerships and resources, became the center of North American EV manufacturing. America's leadership in the green economy faded. Trust in US policy was shattered. Rebuilding alliances would take years. The world learned it could thrive without America at the center. The lesson: economic isolation brings swift, severe consequences. The US must now reassess its role in a world that has moved on. The future depends on learning from this costly mistake.